Ever wondered how taxes work in Canada? Let's dive right into it. Picture taxes as a way of giving back to society. They're like dues we pay to enjoy the benefits of living in a country like Canada. These benefits include things like public services, infrastructure, healthcare, and education. In essence, taxes are how we pool our resources to build and maintain the society we want to live in. Now, in Canada, there are two main types of taxes: federal and provincial. The federal tax, as the name suggests, is a tax that is levied by the federal government of Canada. It's used to fund national initiatives and services like defense, foreign affairs, and federal law enforcement. On the other hand, provincial taxes are levied by the provincial governments and are used to fund local services and initiatives such as education, healthcare, and infrastructure within the province. These taxes, whether federal or provincial, can be direct or indirect. Direct taxes are those that are imposed on income, wealth, and property. These are directly paid to the government by the taxpayer. Indirect taxes, on the other hand, are imposed on goods and services. These are paid to the government indirectly through the increased price of the goods or services. But here's the thing, even though taxes are crucial for the functioning of our society, we all know that nobody enjoys paying them. This is why it's important to understand how they work, because by understanding them, we can all make informed decisions about our finances, and potentially even find ways to legally reduce our tax bills. So now we have a basic understanding of what taxes are and why we pay them. Firstly, we'll delve into federal taxes. To understand the tax structure in Canada, it's crucial to know the role of federal taxes. These are levied by the federal government and are used for a wide array of national programs and services, such as healthcare, infrastructure, and defense, among other things. Let's learn about the main types of federal taxes. Firstly, we have the income tax, which is likely the one you're most familiar with. This tax is progressive, meaning the more you earn, the higher the tax rate you're subject to. It's calculated based on a percentage of your annual income, with the percentage increasing as your income goes up. Next, we have the Goods and Services Tax, or GST. And this is a value-added tax applied to most goods and services sold for domestic consumption. The tax is paid by consumers at the point of purchase and then remitted to the government by the businesses selling the goods and services. Lastly, we have the corporate tax, which is levied on the profits of businesses. It's important to note that businesses pay corporate tax on their net income, which is their total income minus deductions, such as operating expenses. So, how are these taxes calculated? Well, income tax is calculated based on tax brackets, which change every year due to inflation. For GST, it's a flat rate applied to the cost of goods and services. For corporate tax, it's a percentage of a business's net income. It's also worth noting that every year, taxpayers have the opportunity to claim deductions and credits that can lower their tax bill. These can range from expenses related to education, healthcare, and even certain types of investments. That's the gist of federal taxes in Canada, but what about provincial taxes? Let's explore that next. Next, we'll explore provincial taxes. In the grand landscape of Canadian taxation, one important aspect to understand is the concept of provincial taxes. Just as the name suggests, these are taxes that are levied by the provincial governments. They play a vital role in shaping the financial health of individual provinces and differ from federal taxes in several key ways. Unlike federal taxes, which are the same across all provinces and territories, provincial taxes vary from one province to another. This is because each province has the autonomy to set its own tax rates and policies, which can lead to quite a bit of variation. For example, the sales tax rate in one province might be higher than in another, which can have a significant impact on the cost of living for residents. Now, let's delve into the main types of provincial taxes. First up, we have the sales tax. This is a tax that's added onto the price of goods and services at the point of sale. Some provinces have a harmonized sales tax, HST, which is a combination of the federal goods and services tax, GST, and the provincial sales tax. Next, there's the property tax. This is a levy based on the value of a person's property, including homes, land, and other types of real estate. The money collected from property taxes typically goes towards funding local services such as schools, libraries, and infrastructure. Lastly, we have the fuel tax. This is a tax that's imposed on the sale of gasoline, diesel, and other types of fuel. The revenue from this tax helps to fund transportation projects and other provincial initiatives. So, those are the basics of provincial taxes. They're a key part of the fiscal framework of each province, shaping the financial landscape for residents and businesses alike. But the million-dollar question is, but how can you reduce your tax bill? Now, we'll discuss some strategies to reduce your tax bill. The world of taxes can sometimes feel like a maze, but fear not. There are ways to navigate through it and keep more money in your pocket. One of these paths is through tax deductions and tax credits. Let's delve into tax deductions first. These are expenses that you can subtract from your gross income before calculating your tax. They come in various forms like RRSP contributions, childcare expenses, or even certain work-related expenses. By taking advantage of these deductions, you can lower your taxable income and, consequently, your tax bill. Now, on to tax credits. Unlike deductions, tax credits directly reduce the amount of tax you owe, dollar for dollar. Some common tax credits include the basic personal amount, which every taxpayer is entitled to, and credits for medical expenses, charitable donations, or tuition fees. If you qualify for these credits, they can be a powerful tool to lower your tax bill. But remember, tax deductions and credits are just part of the story. They are pieces of a bigger puzzle known as tax planning. This involves understanding how different financial decisions will affect your taxes and making strategic choices to minimize your tax liability. For instance, you might choose to invest in a tax-free savings account instead of a regular savings account because the interest you earn is tax-free. Or you could decide to defer certain income to a year when you expect to be in a lower tax bracket. The possibilities are endless. However, tax planning can be complex and it's not a one-size-fits-all solution. That's why it's crucial to seek advice from a tax professional. They can provide personalized strategies based on your income, expenses, and financial goals. So, with the right planning and advice, you can significantly reduce your tax bill. To wrap up, we've covered a lot of ground about taxes in Canada. We started by demystifying the concept of taxes. They're not just a necessary evil, but a crucial part of how our society functions, funding everything from roads to health care. We then dove into federal taxes, the backbone of the Canadian tax system. We learned about the progressive taxation model, where the more you earn, the higher your tax rate. It's a system designed to ensure fairness, where those who have more contribute more. Next, we ventured into the realm of provincial taxes. While they may vary from province to province, their purpose remains the same: to fund regional projects and services. Whether it's funding for education in Ontario or healthcare in British Columbia, provincial taxes play a significant role. Lastly, we explored some effective strategies to reduce your tax bill. From tax credits and deductions to making the most of your RRSP, we saw that with a little planning and understanding, you can significantly ease your tax burden. Remember, understanding taxes is not just about fulfilling a legal obligation. It's about being an informed citizen, contributing to the society we live in, and making the most of the opportunities available to us. Taxes might seem complex and intimidating, but as we've seen in this video, they don't have to be. With the right knowledge and tools, navigating the Canadian tax system can be manageable and even rewarding. Thanks for watching. If you found this video helpful, please give it a thumbs up, share it with your friends, and don't forget to subscribe to our channel for more informative videos like this one.